The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 9th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I hope that you're off to a great start of your day. Let's make sure that you and I, that we do all that we can do to have a terrific Thursday. And we should always remember that a relationship is not where you go to get something. It's a place where you go to give something. And I want to thank you for giving me your time this morning. I honor you for your choices, and that means I'll do everything in my power to meet your needs for growth and contribution. But I'll need your help. And that help will come with a call. That's right. Pick up the phone right now and call me at 877-927-6648 or internationally at 727-445-1044. If you've got a question and someone else has that same question. So don't call in for me. Don't call in for yourself, but instead call in to help someone else. Now, that's the way to live. Random acts of kindness. Now, true story. In 1845, two brothers made their way to America from Germany. The older brother had learned the trade of making sauerkraut, and he headed to California. The younger brother, he took courses in geology, learned all about rocks and soil. A few years passed, and one day the younger brother set out for California by stagecoach. Imagine that. Upon his arrival, the older brother took him into his cabbage patch, and the younger brother began picking up handfuls of soil, pressing it through his fingers, throwing it down, and picking up more. This is mighty fine soil you have here, brother. Now, to wash off his hands, they both walked down to a nearby stream, and while washing his hands, the younger brother reached down, picked up a handful of quartz from the bottom of the stream, and he pointed to this dull yellow piece. You know what this is? He asked his older brother. The cabbage king shook his head no. That's gold. That's gold, said the younger brother. You've got gold growing in your cabbage patch. How about that? Well, it wasn't really growing. It was really there for the taking. As I said, a true story. One of the richest gold mines in California was found in a cabbage patch. And yesterday, we saw the cabbage patch move into full gear with miners kicking in like there is no tomorrow. It is Terrific Thursday. This is Tiger Financials Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow off 92 points. How could that be? What a roller coaster ride this has been. Talk about a trader's paradise. We got something for bulls. We've got something for bears. The S&P down 11 points. Composite off 29, trading out at 44.38. Russell 2000 off 13 at 1084. Russell 2000, is that going to go attack that consolidation zone again and again and again? DAX is up 35. FTSE's down 27. Goldilocks up 21 bucks. Silver up 55 cents. Platinum up $18. And we've got a request to go take a look at natural gas. If we go take a look at the November contract here right now for our dinners, and you can just give me a call. We can go take a look at anything you'd like to look at. If we take a look at the contract here, what is it that you see as you take a look at this? To me, it's relatively clear. We've got a consolidation going on. The top of that consolidation, right around the $4.16 mark. The bottom of the consolidation, right around where it's trading right now, right around 382 or so. So you've got a consolidation. Just do the math on that. Take $3.80. We'll take $4.16. Subtract it from 3.881. If you see a close below, not 381, but I'd have to say the swing point from July 28th out there at the 378 level, that gives you your price projection inside natural gas. Otherwise, it's just simply trading inside of a consolidation pattern out there. What do we have when we go take a look at the candles? Let's go get rid of the consolidation lines that I put in here. Where are the bulls hanging out? Well, it's very clear that the bulls are hanging out right in this price area. If we take a look at the price action on July 29th out there, you're going to see a nice bullish engulfing candle. What does that set up? That sets up a natural level of support being the low of the candles or candle that it engulfed. That would be July 28th. That would say that low of 3.786 is a key level. If you take a look at the trading session here on September the 8th, September the 8th was at least an outside day. I can't really call that a key reversal session because the market wasn't really extended. A market that's consolidating is not necessarily extended, but it was nonetheless, it was a nice big bullish engulfing candle that engulfed the prior two sessions out there. So this area here should be good support. And if it fails, that'll be telling you that you're going to look for lower price. And that lower price estimate I would use would be that dollar difference of that consolidation pattern. That is what is going on inside natural gas as we take a look at its stock chart. But let's go take a look at the S&P. I mentioned the word key reversal. I mentioned the word outside day. So let's go take a look at the S&P 500. Actually, I want to change charts out here. Let's go take a look at the S&P 500 here because yesterday was a key reversal inside of the S&P, inside of the Dow, inside of the NASDAQ, inside of the XAU, inside of the HUI, inside of the so many different, well, maybe we'll take a look at the different sectors, inside the Qs, inside the SPYs, inside the diamonds, not inside the IWM. The IWM, well, in one sense, maybe it was, maybe it wasn't. Okay, it's a stretched market at the bottom of its consolidation, more so than really that natural gas contract. But if we take a look at how important, look, this is the key. The market communicates to us in certain ways, and one of the ways that it does that, kompai is what I would say. Yeah, tip that little sake glass up there. It is, I think it is Sake Thursday, is it not? But what the market does is it communicates to us, and it utilizes Japanese candlesticks. And these have important meaning. They can assist you in trading. You cannot trade by candlesticks alone. Just as, in my opinion, you really can't trade by just chart patterns alone. The reality is, and nobody covers it, only Stevie that I know of, is that you need them both. And that means you need to understand the language of both out there. It doesn't matter what system you're trading. If you are trading a technical pattern system and you are ignoring the message of the markets with regard to candlesticks, you are missing the whole boatload of wonderful information that gets sent to us. It doesn't mean because we had a key reversal in a bullish engulfing session that an absolute low has been put in. It does not. But it has such meaning that if that low gets taken out, that'll tell you a major significant shift, or at least an A to B equals CD to the downside would be setting up here. But what we know is what we know, and that is that yesterday was a key reversal session. It could only happen with three elements taking place. Number one, the market must be extended. Well, it was extended, in my opinion. If you take a look at the relative strength indicator, if you take a look at the move off of the highs out here, so it was extended. The intra-session high and low needs to be above and below, needs to be the intraday session needs to exceed the low of the prior session. I know I can get it out. And above the high of the prior session. Well, we had that. And then you just simply need a change in direction. It quite frankly can be one tick. It can be just one tick, either to the upside or the downside. In this case here, it would have needed to be a uptick to the upside. Well, you got more than that. You got a big, huge bullish engulfing session. Now, what's interesting, if we go take a look at the stock chart, you may say, hey, Steve-O, when was the last time we saw a key reversal session? So let's go ahead and let's answer that. But there's a little white line on my screen. I probably should change the color of it. Let's go change the color of it so that it's not so confusing to you. Let me do that. Let's change that line. Trend line. There we go. Let's change that to a nice red because that's going to be an important level for us to be watching as well. Why didn't it change that? That's interesting. Maybe it was because I grabbed the wrong trend line. Oh, that's really weird. That's really weird. I changed. Let me try to do it this way. My computer system here, I think, is going to need the reboot as soon as I get off the air because it's doing things that I haven't seen it do before. It's just testing me. Just like a woman out there, that computer system. Okay, I meant that in the most positive way, and I actually wasn't gender specific, just referring to energy out here. But if you take a look at the low back in October of 2011, and you draw a little trend line there, you can see that that's an important trend line out here. And yesterday, the market moved down into that trend line. Hey, the trend can get broken. When a trend gets broken, a price gets back inside. It tells you just how strong that trend is. Well, that trend, in essence, was broken, if we take a look at it here now, to the last time that it was broken. In this case here, it was not. We take a look at the last time that was broken where we had a key reversal session. I'm just trying to expand this up so it makes it a little bit easier for you. That took place right here on November 16, 2012. Another significant low that was inside of the marketplace out there. See, the market was extended, in this case here, more extended than, quite frankly, what we took a look at yesterday inside the markets. That 14-period relative strength indicator, that got down into a level of about 27.21. We were near 30 even yesterday. Well, we might have been inter-session. And what do we have? You saw where on November the 16th, and I can remember that session real well because I remember doing Tom's show that evening and communicating to folks out there because there was some kind of financial scare that was going on. I think the sky was falling in, if I'm not mistaken. I mean, it was the sky around Europe or whatever might have been going on. Go back in the news, see what was going on around November 2012. Might have been Greece was caving, and who knows what. I mean, I got cards and emails. I didn't get cards, but I certainly got emails from folks because I was saying, hey, that's a significant low in the marketplace and time to go long. My subscribers now, we did go long on that trading session, and people were just like, how can you do that? Anyways, let's not talk about that. Let's talk about the importance of that key reversal session. Now, what was nice here on November 19th, you got a nice move up. You got some conviction behind that move, and then it was really off to the races. Here's an outside day versus a key reversal session, and that's coming back to December 31st out there. Here you have the prior day session where the low and the high was exceeded, and you have a this is when the fiscal cliff, right? That's all. Remember, where aren't you glad we don't have to talk about the fiscal cliff these days out there? But shoot, that was the mantra. Maybe this was the mantra too back in November 16th. I can't recall what it was. But that was an outside day. It was a bullish engulfing. And not that has any, not that doesn't mean anything. It just has a little bit less meaning than an actual key reversal. There are other key reversal sessions that we can find in the market. We won't spend the time boring you and going back and locating those. Just know that yesterday's session was very important, both from the standpoint of the low holding out there, because if that low fails, then that's a problem out here. At this stage, the low of yesterday, and I don't expect that it will fail. I do expect we'll see a lot of choppiness out here in the market as this low gets formed. But that low out here that you want to keep an eye on is going to be 19.25 and a quarter out there. You break through that, and that has a whole different message. But I don't suspect that is really what is going to go ahead and take place inside of the marketplace. Now, I will say that if the ES Mini does get above and closes above and stays above 1966.50, that's the number. And we're talking to the tick out here. 1966.50, you get above that, you stay above that, then we are off to the races. Then yesterday was the beginning of an initiation move, with the VIX being more than 10% off on a one-day rate of change to the downside out there. Then that will be signaling a initiation move out here. So we saw those key reversal sessions. They were across the board. If we take a look at the Dow as well, Dow had a key reversal session yesterday. What is the Dow likely to do? And if you take a look at the Dow, it's actually very strong, right? And we'll go take a look at the Russell, because the Russell, I just want to make sure and see where it's headed. I don't think it's anywhere near the bottom of the consolidation range, but it could be. Well, that's too weird. Grab the some type of tool out there that didn't mean to grab. Let's try grabbing the retracement tool. So what do we know about the Dow and where it formed that key reversal session? Right at the 0.618 retracement level. So it's an important area. 16,722, by the way, is the 0.618 retracement level. But what we want to do is we want to pay attention to that October 8th low out there at 16,663. You bust through that, and that could mean trouble. Otherwise, what the Dow is actually doing, it's getting ready to form an A to B equals CD to the upside. Blasphemous, most of you bears say out there. Stevie, and I've got the direct line to Santa. He says get ready for a Santa Claus rally, folks. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 72, S&P down 9, gold up $22, $23 here. As we talked yesterday. I forgot who called, and we were talking about gold. We talked about it. Might have been Larry in Wyoming, I think. We talked about it pretty thoroughly, and I said, yeah, the way that I'm taking a look at what gold and the miners are doing is they're just quietly trying to slide out the door out here. They're just trying to. They don't want anybody to see all the accumulation and what's going on out there. And boy, did that take off to the upside out here. If we take a look at the XAU, it's back $1.69 as we're speaking right now. But you talk about key reversal sessions, things being over overextended and so forth. And that one truly fits the bill. So there is a gold mine in this little cabbage patch out here. Becomes a relatively easy trade. As we talked about earlier on the first hour, got a call from John in Texas. We were taking a look at gold. And you just have to identify some spots where you're willing to go ahead and take some risk out here. I think the trade is relatively simple. It's much like the markets out here, although I think the trade in gold and silver is much easier, or the trade in the miners is much easier. Your stop in this case, because this should be a solid bottom. So unlike the, because this is not a choppy, this is not a not that it can't turn into a choppy, messy bottom, but inside the indexes, it is choppy. In this case here, yesterday was a signal of coming off of the bottom with conviction. In fact, we can go take a look, maybe just a couple of gold stocks. So you had a key reversal session out here. Let's just take a look at Rand Gold, GOLD. It's up 43 cents as we speak right now. Rand Gold looks to be one of the stronger in the group out here because it's trading to the upside. It says, hey, I don't care what all you other cousins and brothers and sisters are doing out there. I'm moving to the upside out here. So Rand Gold, GOLD, that's probably one that you might want to take a look at. Key reversal session out here. You had some decent volume, certainly decent volume, 1.5 million shares. And, you know, in one sense, it's really kind of like an ideal trade setup yesterday inside of Rand Gold. Because take a look at what it did. Rand Gold, on October the 3rd, it gaps down with 1.9 million shares. And yesterday, with Goldilocks, with everything taken off to the upside, what did Rand Gold do? It tested that low. It got down to a low of $70.12. So it tests that low, meaning it gets below 65 bucks. I got down to 64.45. I think I said 70.12. That was the high. My apology. So it gets down to 64.45 intraday, tests the low, rejects it with what? Light volume. You got to love that. A key reversal session, a test of a swing point with light volume. Are you kidding me? Can it get much better than that? We're talking about 1.9 million shares on October 3rd versus yesterday, 1.5 million shares out there. Yeah, I think if Rand Gold is telling a picture, that's a beautiful picture. Now, where is it that Rand Gold can trade up to? Look, it could be a retracement, or it could really be the swing points. And the swing points out here that it should target, so July the 10th, July 29th, you know, that's in the $89-ish type range out there. If you take a look at retracements just simply off of the July 29th level down to the low that came in here on October 8th, the dead cat bounce ought to get you into 73.90, 79.73. But I believe instead what we have seen is a serious mucho grande, serious, significant bottom inside of the metals marketplace. I mean, it could not get any clearer out there. If we go take a look at one of the number one weightings inside the GDX, and that would be Gold Corp out here. I think it might be number one. I have to go back and take a look. Well, actually, let me just do that right now because we did that yesterday. Yeah, Gold Corp is the number one weighting structure inside of the GDX out here. And if we take a look at that yesterday, what did Gold Corp do? Well, Gold Corp had completed a 1 to 2 A to B equals CD to the downside. Now, for all of you winners that got Tom's book, The Art of Timing the Trade, your ultimate mastery trading system, I think I got that right. That was from memory. And if I didn't, my apologies to Mr. O'Brien, but I think I got that right. And what you'd know is that when you do a 1 to 2 A to B equals CD, to the upside or the downside, you usually get a change in trend, right? So there is a technique. There's a tool that Tom has given to us so many years ago. I first learned that from him back in 2006, as a matter of fact, and I have not forgot that lesson to this day. The only thing I added to that lesson is that how do you know if really that's the end of the move? And that's where those candlesticks, that's where those patterns really come into place out here. And if we take a look at Gold Corp, what did it do? Well, yesterday it came off of the bottom with a vengeance. It had volume behind it of 10.8 million shares. Now, in the case of Gold Corp, it didn't test the low with light volume like Rand Gold did. But what it did was it had, if you were going to try to buy and sell the D point, well, there you go. It's in place right now. Now, the question just becomes, where is it that you go ahead and you take your trade? And like we talked about, the key to trading and investing, it's not so much getting the entry right. What it is making sure that you've got the stop right. Because once you know where your stop is, then it's just a mathematical exercise. It's all about position sizing. That's the key, folks. It's all about position sizing. This is Steve Rhodes, TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Dow off 114, S&P down 13. Boy, do we have some traders, paradise markets out here or what? Hey, let's take a look at some things that are moving and grooving to the upside and to the downside out here. Let's go take a look at what's moving to the upside. We got ticker symbol RENT, R-E-N-T. That's the ticker symbol. It's spelled rent out here. Let me see. What do we have out here? Just making sure there's no buyout or anything. Whoa, this is not good. The message that just popped up on my screen. That's so weird. Oh, man, with a half an hour to go. Let's just hope that the system stays up. That's really weird. Oh, my goodness. That's terrible. Okay, I'm going to have to shut that down or something. I got to shut that down for sure. That's weird. Okay, let me. So that's going to really make it interesting in doing this show here. I'm going to switch over to a. It's like it's Frozen here as well. Not the Disney classic Frozen. At least that's I could pull out Elsa or something like that, and maybe she could unfreeze me. I'm not even sure I got the characters right, but my grandkids sing that stuff. It's all about Frozen, huh? Talk about a Disney hit out there. Oh, that's not good either. Okay, so let's see. What is it that I can put up on my screen out here that we can take a look at? Hey, let's take a look at this here. Let's go look at an intraday chart. So my apologies, folks. I'm not sure what the issues are. Let's take an intraday chart out here. Take a look at where we may be at. So we've got the ES Mini. This is what we're going to take a look at. So we're going to look at super intraday out here. We're looking at a 5-minute chart. Coming off of the high out here, they can go test that out. So we made that high out here from yesterday. If you were listening on the morning show, we were taking a look at the pattern that was setting up on the NQ. I've got the ES Mini up on my screen as we speak right now. Let me check this to the upside out here. We'll take a look at what it did, a number of different tools. Now let's just look at what it did to the downside out here, because I think it was on the 10-minute chart that I was looking at. But right now, where we are at on the way down, we're below any kind of market profiles out here. That profile, the last one that formed out here, support is 1955.58. You can see that coming off this high that was formed out here at 4:15 a.m., we're either in a 7th wave or a 5th wave on the way down out here. So that means right now what we're waiting for is some kind of reversal signal to determine whether or not that is the case, because we've got a market here as soon as this pops up on the screen, and I sure hope that it does here. There we go. What we can see is that the ES Mini has been traveling lower on a 5-minute chart now. Has been traveling lower with less relative weakness out here. So that pattern still is active at this time. That pattern can become inactivated if, in fact, price moves down with a lot more weakness, gets below the low that was set out here at the time period of about 7:45 a.m. So we're looking, that's what's going on a 5-minute chart. If we take a look at retracement, so let's go take a look at the retracement tool out here. How's this for a quick recovery out here? If we take a look at the retracements, now this isn't going to be exact because I don't have a magnetic tool that grabs the exact bottom of the swing point and the exact top, but it's going to be close out here. So the 0.618 retracement level is down at 1937. So 1937 becomes our target. So in this 5-minute time frame here, we could continue to see the price at least move down into that area. If it moves down into the 0.618 retracement level, still maintains this 7th wave on the way down, still maintains a price relative strength divergent pattern, and then we see a bullish candle, then the move to the downside would be over. That's taking a look at what's going on inside of a 5-minute chart. Let's go take a look at it. I'm going to try to start this back up. So I'm really multitasking out here. So let me try to start this back up. And let's go take a look at a 10-minute chart out here. So let's go see what the 10, because each of these are going to have just a little bit different pattern out here. Well, on the 10-minute chart, you can see it's also in potentially that 7th wave on the way down. It's going to be either 7th or we come back out here and try to test that. There we go. Let's test that from this high that came in. It's either going to be the 4th or the 7th. Okay, and between 4 and 7 is when you can start to see some turns. Now, in this case here, we don't have a price relative strength divergent pattern, although that seems to be off. It should be showing up on my screen because I show that we should have one. So I've got something going wacky with the indicator out there. Okay, so you got the 5-minute, the 10-minute. They're kind of working together with themselves out here. Let's go take a look and see what's going on a 30-minute chart out here. Oh, look, we're back up. Okay, so that's good. So it is back up. But let's go take a look at the 30-minute out here. Then we'll go take a look at some stocks that are popping and dropping out here. So on a 30-minute chart, what we know is as the high was being made out here this morning at the 4:30 a.m. time frame, it made that 4th wave on the way up. We're only in 2 waves on the way down. Again, when we take a look at the retracement levels out here, the retracement, their Fibonacci coming down from the low out here during that 11:30 session yesterday to the high put in at about 4:30. Again, that number about 1937 is your 0.618. So at this stage here, nothing more, because we had such wide price spread yesterday, at this stage of the game, nothing more than just a normal retracement / move to the downside. On a 30-minute chart out here, I would say, 1937 likely becomes your target area out there. Let's go finish this off and take a look at a 120-minute time frame. Well, I guess I got them all out here. How about that? I've got all the different time frames. So we can go see what's going on inside each of the different time frames. So let's, as long as we can do that, let's, in fact, do that out here. So let's take a look at this. Let me turn my chart trader off. Okay, so we can see as we were making the bottom here yesterday, a price relative strength divergent pattern on the 120-minute time frame chart. Here we've got support of its TAS market profile. So old resistance should become new support. And we'll see if that 1942 level holds. Now, 1937, as I recall, is your 0.618 retracement level. So it's going to be that 1937, 1942 that will provide us with our next message out here. And that's using a 2-hour time frame chart. Let's go see what information we can glean off that 5-hour energy chart out here. Taking a look at the S&P futures as well, with the Dow off 131 right now. What do we get on the 5-hour chart out here? You got that price relative strength divergent pattern that took place at going into the 2 p.m. level. And we can see also at 1943 is its a TAS market profile resistance level. So I would have to say, and you got the point of control right around 1938. So based on a retracement level of about 1937, based on a point of control out here in the 1938 range for the ES mini on the 300-minute chart, I expect that should be the, it's not my expectation. What the chart is telling us is that should be some pretty good support in this retracement and inside the pullback out there. We'll see if, in fact, that comes to fruition. The only way we'll know if that comes to fruition is some kind of reversal signal out there. Now, let's try this again. Let's go back and take a look at some things that are moving. Let's take a look at RENT out here. Again, I don't think that this is, well, let me see. What is this right here? Is this it's up 13%. Rent track is from measurement partnerships done to deliver. No, it just looks like they've got a new contract here, but I haven't read the whole detail because I don't think you really want me to read everything. But let's take a look at it. So the assumption here is that it's not any kind of buyout. Maybe somebody in the den will tell me if that is the case out here. Let's go take a look. It's up nicely with a wide price spread. It's up over its most recent highs. This would be forming in fact, this had a nice sign of strength back here on the trading session of January 16th out here. So it's now up and over a swing point with volume. That swing point at 102,000 shares. You've done 224. The A to B equals CD pattern inside ticker symbol RENT, at least the small one that we will be looking at. That's going to give us a price projection out here in the range of 78.61. You're trading at 73.38 as we speak right now. So it's got more fuel, more energy to run to the upside. You've got Lindsay Corp. That's up 8%, up about $6 right now. They are out with numbers here. Lindsay Corp is off its session high, but boy, did it gap up, and it looks like it is trying to break its trend. But so far, it looks like perhaps no cigar out here. If we take a look at the trend, just simply use right now the high from April 28th. And, that is basically contained. You can see how price just really it opened up, it gapped up, and then it traded right into resistance of that trend. Now, it's got nice volume behind its move today, 213,000 shares thus far for this equity. That's pretty good volume. Last high volume session was on June 25th. It had twice that volume, 546, and that was a move down. So also moving into a sign of weakness out here. That's ticker symbol LNN. That is Lindsay Corp. Nonetheless, moving to the upside. Let's take a look at Lakeland Industries. Maybe this is a buyout. Let's see. Lakeland Industries. No. How about that? It's a huge rally after what is Lakeland Industries? Are they in Lakeland? Is the question. Lakeland, Florida. Doesn't tell me. This doesn't tell me, but I can find out. But let's not worry about where they're located. Let's just go see what the stock chart is doing out here. Wow. Can't really trade this too much. On August 12th, it generated, it produced 8,700 shares out here. So it's gotten pretty hot here since October 1st, 5.9 million shares. Okay, now it has my interest. What is this thing that they call Lakeland? So let's put this up here. Give me a moment to do a quick research on Lakeland. Let me hit the button here. We'll see what the company profile is. Let's just go ahead and put that up on the screen out here. What do they do? Why does this provides, what the heck is this? That's so weird. So under business description, it says Midwest Vaco Corporation provides packaging solutions, healthcare, beauty, and personal. Man, talk about my system my system is pretty messed up out here. I've seen some things that just simply don't make sense. Looks like a total reboot of the system is in order out here. So I have no idea where Lakeland Industries is located. I'm just glad that I've got a data feed out here so that I can provide you with information. But some of the information looks to be a bit suspect out here. Okay, let's take a look at some things that are moving to the downside out here. You got Priceline off $13. Let's go see what Priceline is doing. Priceline with not a key reversal session yesterday, just simply a bullish engulfing out here. What we do know about Priceline is what Priceline wants to do is go test its low, its high volume low from May the 8th. Continues to trade inside that swing point. The range on that is 1087.26. The high is 1152.98. You're at 1114. Says that low wants to get tested. Now it's got 2.6 million shares down there. It's been pulling back into that area with light volume. I would expect that Priceline should hold that low out there. We won't know until we see that low get tested and what kind of volume actually comes into it. We take a look at Hubble Inc., HUB.B. That's off 8% this morning. That is gapping down. This looks like a sideways consolidation move. This is just simply gap down into its sign of strength. So it looks like those funds or those people, those investors are out there. That's in the 112.57 level. Now, the sign of strength out there had volume of 900,000 shares, and you've done 667,000 shares today. That's a bit too much. That would be saying that this equity ought to come down and really test where it broke out from, which is the trading session from January 8th, right around the 109.69 level. However, this is a strong level of support. It has been tested, meaning the 112.57 area. It has been tested back on January 27th of 2014, this February 3rd and 4th, as well as back here on April the 11th. So you got another test. So this is Hubble, HUB.B, and it is truly consolidating sideways, just pulled back into its sign of strength, but with a bit too much volume out there. We've got Gap. GPS is the ticker symbol. They were out with earnings after the bell, I believe. 16 million shares it traded to the downside this morning. So Gap is trading into its lows out here, its most recent lows, I should say. This is in a absolute consolidation. Boy, if you talk about consolidations are all over the place out here inside of the market. In the case of the Gap, GPS is the ticker symbol. Its consolidation pattern is right around the 36.50 level to 46.50. So you got a 10-point consolidation. It has been consolidating since April 24th, 2013. The volume this morning, as I said, it's absolutely huge, but it has not broken through this level. The last time we saw any volume down at this area was 17 million shares, but that was for an entire day's worth of trading back in October. That just tells us right now how strong of a consolidation this 36.50 level is. Nonetheless, if you break through that 36.50, what I mean by that is really break and close below 36.13, you probably have 10 points to the downside. Now, where does 10 points to the downside take us to inside the gap at $26? What do we have down at about the $26 level? Well, at the, you don't even have its next, okay, well, here's where the gap would actually move to. So the gap has a sign of strength out here at 29.92. So I say forget the consolidation. Yeah, it should do the 10-point move, but you got a fairly large, wide price spread accelerated volume trading session on August the 2nd. That's got 20 million shares out there. So I say if the gap breaks this 36 area, 29.92 becomes the next level of support on it. That is ticker symbol GP. Let's see, what else do we have moving here? Anything large to the downside? You've got one that's off by 23% out here. Ticker symbol here is ARCW. Looks like they just simply missed their estimates. Let's go see where this is trading into. This has been a nice little rocket ship out here. Volume, not anything substantial. Unfortunately, it's like 80, 100,000 shares. So, but this morning, 274,000 shares, trying to take out a swing point here from back on August the 6th. Our Dow is down 125. S&P is off 14. Composite down 28. Gold up $22. Pretty much unchanged. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow off 146, S&P down 16, composite off 32. You know, we got these moves here, 275-point moves, 250-point moves out here. You know, 144, 145 is kind of not too much out here, right? It's just normal retracements that are going on. If we take a look at the NQ out here, just as an example, let's take a look at the 30-minute chart. It was one that gave us the best signal of a bottom yesterday. And we go from the low out here where that bottom came in at 11:30. We go from that low to the high that came in out here at 4:30 this morning. What we'll see inside the NQ thus far, it has only made a .382 retracement. The .382 level right around 4,004. So far what we have seen is the level of the low is 4,004.75. Doesn't mean that it can't move lower out here, but so far so good on just a normal retracement. I know that the numbers look large out there, but we just simply have to keep that in perspective because the numbers have been large to the upside as well as to the downside out here. And just to so that we take a look at some different time frames out here, if we take a look at the where did I put that chart? The weekly chart here. Let's just use the NDX 100. Now, obviously, the week doesn't end till tomorrow. If you're watching this on Tiger TV, the top portion of my screen is the weekly chart for the NDX. The bottom portion of the screen is the daily chart. And at this stage, look, we had a bear sash candle, bear sash. That is a bearish reversal signal, no question about it. We had that. Come on, find my cursor across here. So we did get that. That was in place on September 29th. That says that high, or actually the week before, September 22nd, 41.1891, is a level of resistance here. But we have not seen this break to the downside. There's not even been enough of if you take a look at this candle that is formed out here, it looks like a hammer. It smells like a hammer, but it's really not a hammer candle. There hasn't been enough of a move down. There hasn't been enough of retracement inside of the NDX 100 in order to even form a hammer candle. There's nothing bearish about this. If we take a look at momentum of of what's going on inside of the NDX. There's nothing other than just a little bit of a cautionary tale as we take a look at the weekly chart. Of course, the weekly chart is going to trump the daily, and the daily is going to trump the 300, the 200, the 120, the 30, and so forth. But the NDX 100, this looks pretty darn strong out here. Let's take a look at the financial sector real quickly. The XLF out here. I didn't even get a chance to look at the individual sectors out here. Now, its weekly chart looks a little bit different. The XLF is the number 2 weighting structure. It's got some bears that are hanging out as we take a look at the weekly chart up here out at the highs. But even still, even Steven, it still has not really broken down, not just yet. Let's take a look at the XLK. I imagine that the XLK looks better. Yeah. Now, the XLK does have enough of a move. How about that? So there's your hammer candle inside of the XLK as we speak right now. Of course, we're far from the week coming to the end, but this is the number 1 sector within inside of the S&P 500. So it just says to me that the retracement that we're looking at that's taken place this morning, don't get too caught up in the numbers. Remember, you've got to keep those in perspective out here, that at this stage of the game, it's just your natural levels of retracement out here. But the numero uno sector inside of the technology. How about this sector, right? Well, I think I've mentioned to you, consumer staples and the healthcare are absolutely on fire. Please, this is the XLV, number 3 or number 4 weighting inside the S&P 500. Please, anybody call in. Of course, you can't because we're going to be off in 20 minutes. And tell me what's bearish about the XLV. Yeah, nothing. How about the XLP? Did that take out its highs yesterday on the daily chart out here? I think it did. Yeah, the XLP. I didn't get a chance to do it, but I bet you if Basil were to take a look at it, this thing is now in a new leg on the way up here. It's recycled, and the consumer staples look like they want higher price out there. Speaking of Basil, he'll be up next, folks, so stay tuned for Basil Chapman and Drop to start your day. Have a terrific Thursday. As always, thanks so much for joining me here at TFNN. Have a great Thursday. I look forward to seeing you tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.